club, and I will just say that since about 2010, we have been pandemic compatible by only hosting our meetings online. So
we are leaders in social distancing.
Exactly.
But some of us have never met in person.
Yes, that's true. Anti-socialists unite. So okay, and I guess probably more attendees will join us, but they can just catch up. So my name is Brent Gall. I'm the president. The three other members share in some of the other club responsibilities or leadership roles. The agenda is shown on the screen now. It's pretty much the standard format that we go through. On a rotating basis, we have a small educational segment. I'll do that this month. Jack, our club secretary, will share the minutes from last meeting. We'll move on to Ira, who's our treasurer, to go over our financial statements and portfolio. Jack will then present his stock to study for the month, which is National Mortgage Insurance Holdings. We'll then go over our existing portfolio, and each member will report on his current owned or responsible securities, and then we'll vote on whether to buy, sell, hold all our current securities. And then I didn't have any old or new business, so this might be hopefully a fairly quick meeting, and then we can adjourn. So if people have questions as things are going on, please feel free to ask them. I just request that as people are presenting things, maybe just hold questions to the end of their presentation, just so we don't derail their presentation. But we're here to teach and to learn from each other, so happy to answer questions as they come up. Okay, so welcome everyone. I hope everyone has been safe and washing their hands often. Like I said, we've been a Model Investment Club for, it's 10 years since we went online. Ira, when did we start? Like it was 2005 or so?
2008.
2008. So we've been together for about 12 years now. Meeting monthly, second Saturday of the month. And always looking for new members if people are interested. We can talk about that later on in the meeting. Okay, moving on then to educational segment. Let me see here. So for the educational segment, I dusted off a topic that we've used in the past. For those maybe new to better investing, there's a couple of software tools that we use that certainly aren't required, but make analyzing stocks a lot easier. One of them is the Toolkit software package, and there's a feature in there called Challenger, which is a little known feature that can be helpful to compare two holdings based on your own judgment to determine which is to basically challenge them to see if the challenger is a better buy for the money. So exactly what is this tool? It's a tool for comparing the merits of two stocks. The challenging stock must be equal or higher in quality for you to actually want to invest in it. And it helps maintain high probability of portfolio gains. So there's another tool out in this stock software package called Stock Comparison Guide. And there's actually, I guess, three similar tools: Challenge Tree, Stock Comparison Guide, and Challenger. The Challenge Tree is only available in a software called Stock Analyst. And or anyone, do you know is Stock Analyst still even an offered software tool from iClub? I think they might have been obsoleted a while ago.
I think you're out of date here.
Yeah. Anyway, that was a more advanced method of analyzing stocks. Challenger, like I mentioned, is available in Toolkit, which I'll show momentarily here. Those two compare the cost of replacement. So if you have an existing security that you hold, what is the relative benefit of selling that holding and investing that same money into a challenging security. Stock comparison guide, on the other hand, compares two or more candidates for purchase. So looking at various key characteristics of the companies to choose from a kind of a range of different candidates, what would be the best to put your money into. And it's worth noting that all of these tools use your own judgment to make the comparison. SSG is stock selection guide. It's not, you're not getting the information from like a higher authority that tells you, go this way. It relies on your feelings of the company and how you've analyzed the current situation and the future prospects of those candidates. So an example would be that you have already purchased a stock with a 3-to-1 upside downside ratio. Because you've chosen quite well, the stock price has grown 50% to be the middle of the range. So you've purchased here right at the edge of the buy zone. The current price has increased so that it's in the middle of the hold zone. So now your upside downside ratio is 1-to-1, which is great from a growth standpoint, but now the potential upside has deteriorated from being 100% at the time of purchase to only 50% now. So you could use the Challenger tool to compare this stock to a candidate with more growth potential. One possibility could be that there's not a better candidate and it'll hopefully just continue growing. Another one might be that there's a cheaper option that has a lot more growth potential that you want to sink your money into. So the tool itself, this is a screen grab from the stock selection guide. It's the tool is down in the select portfolios section where you highlight a stock that you want and then click the challenge button. And that'll allow you then to select a Challenger stock. So in this example, and like I mentioned before, Challenger only compares 2 stocks to each other. This one is not a great candidate for being replaced. The current holding was Office Depot and Challenger is Staples, highlighted by the 2 colors of fonts. And the chart tells you that the growth potential of Office Depot is higher than the growth potential of Staples, taking in the current pricing and the analytical values that you've put in. In comparison, for one where the Challenger stock might be a better option, the graph will look something like this, where the growth potential of the Challenger in blue actually has a crossover point with the current holding, which would be Applebee's. Now, granted, these aren't in the same industry, but it's just for illustration purposes. And you can see in the chart up at the top that the total return is higher for the Challenger of FactSet than it is on Applebee's. So this could be, assuming that all the other things are considered equal, this could be a better candidate for continuing the gains in your portfolio than holding on to Applebee's stock. And then I include here the challenge tree example. This, again, I think like we mentioned, is probably an out-of-date screen grab from the tool that might no longer be supported, but it just shows what used to be available in that. And then my sources taken from a very good book, Starting and Running Profit Investment Club, and a couple of sites talking about challenge tree and those options. Any questions?
I think I'm going to do a challenge today for my stock sheet to show how Essent relates to NMIH.
Okay, excellent, very timely.
Yep.
Okay, let me get back to Okay. Moving on then, so we'll hand it over to Jack for the club secretary report.
Okay. Okay. Can you see my screen?
Yep.
All right, so I've made a couple of small changes, mostly typos for this compared to what I sent out to you guys earlier in the month. I did the same thing for last time, so
John, we're getting some type of
my
heavy.
dates right.
We're picking up some type of heavy background noise from somebody.
Yeah.
That's better.
I'll work on it just a second. No, that's still there. Sorry. Okay. I'll talk louder. How's that? Okay, so the main thing that's different about this is my SSG size diversification chart. I've been fooling with these a little bit, and I think I've given up and I'm going back to the better investing way of doing it. But these aren't so bad. So this shows that our small stock holdings are less than what the goal is. The goal is to have about 25% small, 25% large, and 50% medium-sized stocks. The dividing line for small is less than $1 billion. Medium are between $1 and $10 billion in sales, and large is bigger than 10 billion. So we're a little overweighted in medium and large, as you see here. It's even more, a little more so because we sold Proto Labs last time. So last month, Steve presented Viva Systems, and we decided not to buy that, but to sell all of Protolab and buy Middleby, which I think was on our watch list. I represented how to get rich with deep in the money call options. And his slide shows in our education folder on Vivio. Ira also recommended Get Rich with Options by Lee Lowell. So last month I corrected 2 dates in the minutes, and the corrected minutes were uploaded.
Thank you.
I sent the partnership agreement out to Steve to sign, scan, and send to Ira, which I believe he did. And then Steve also needed to check his email. Steve, did you do that? To sign the volunteer, to fill out the volunteer standard of conduct form?
I did not. That I need to do that.
Okay. So I think that's that's the only thing that needs left to happen for us to actually become a model club, although I think we are one at the moment. We finished the finance audit, and there was a discrepancy of $100, but I think it was because we misconstrued one of the checks that Brent sent in. But Ira fixed it, fixed the allocation. So I think we're fine. Mm-hmm. Did I get that right, Ira?
That's right. Yeah, that money was just a pass-through money for Brent's personal.
That's right. It was on its way to better investing.
Right.
So we got new checks because Nancy has left the club. Nancy left last December. So we needed to get new checks that she wasn't on, I guess. Okay, I'm going to present the stocks to study, and Brent's going to do the education segment. Last time I reported the number of visitors on the correct form on the Better Investing website. I'll try to do the same thing again this time. And then our watch list CBRE was removed from the watch list. Middleby was added. I'm sorry, Middleby was also removed because we bought it. And Vive and BSTC were added to the watch list. And then one of the things I corrected was that I said that this meeting would be in 2019, and that's incorrect. So that's it for me.
Thank you. I had missed that we added BSTC back to the watch list. I'll add that to the agenda.
I'm not sure that's a strong wish for all the members, but
Yes, that's true. It's kind of a contentious company there,
yeah,
but okay. Yeah. Okay. Excellent. Thank you. Any concerns with the minutes as presented? No? All right. All right, well, let's move on to you for treasurer's report.
Okay, you want to make me presenter there?
Yep.
Right. Screen. Okay. All right, you can see my screen?
Yep.
All right, so our current holdings are listed here. We have $870.64 in cash. We've been hit pretty hard like everybody else. Member status. And we purchased 77 shares of Middleby at $112.65. We picked up some dividends here, as you can see. In March, Visa 18, Tractor Supply 29.75, and all the member contributions are up to date. Performance benchmark. $9.5 versus 10.1 for Vanguard 500. Inception of the club, January 6, 2008. And looking more recent here. Let's see. Okay, let's do that. 7 versus 82. Investment performance report. Regeneron's at the top of the list.
yay. Did it actually go up?
Yes.
I'm happy about that. That's my initials.
Excellent work.
Thank you.
And member performance. And all the K1s are available. And the IRS has the 1065. So we're okay. Any questions?
How many members do you have?
Currently-
there's four.
Yeah, currently 4.
Okay. This is my first time here, so I'm at a really disadvantage. Everything looks really nice. I got many questions and I probably won't ask them today. I'm just trying to have a learning experience here, and maybe I'll have some later. Thank you.
Okay, sounds good. Thanks. Okay, thank you, Ira. Looks good. Yeah, if there's no other questions, we'll kick it back to Jack for presentation.
Okay. Okay. Everybody see my screen?
Yes.
Okay, so this is a format that we use to present with. This is just a spreadsheet to organize our thoughts. So NMIH is traded on NASDAQ. It's a small cap, small growth, according to Morningstar, I think. National Mortgage Insurance Holdings, Inc. It's got all kinds of sub-corporations, subsidiaries, National Mortgage Insurance Corporation and National Mortgage Reinsurance, Inc. Ray 1. It offers mortgage insurance and reinsurance on loans and outsourced loan review services to mortgage loan originators. So its customers are banks and online lenders and whoever else hands out mortgage these days. Both regional, national banks, credit unions, money center banks, community banks, internet sourced lenders, and other non-bank lenders. It's approved to write mortgage insurance in all 50 states. Re1 specializes in providing reinsurance on loans with coverage levels in excess of 25%. I think 20% is the usual cutoff. So 25% means that you're 25%. How to say this? Yeah, geez. Does anybody help me out here? What does this mean? I thought I knew, and now I'm explaining it, I can't figure it out. Is Joe here by any chance?
Joe is here. I'm not sure exactly what you're talking. Oh, all right. If you borrow money to buy a house, you're expected to ordinarily put 20% down, or there's some number like that. If it goes maybe 75% in this case, excuse me, 25% in this case. If you don't have enough, then you have a reinsurance company that comes back and provides over coverage, if you will, to cover up whatever that shortfall.
Are you talking about EMI?
I think so.
Yes, this does PMI. Yes,
Okay.
That's their business. But it looks like they've divided up their company into 2 subsidiaries that do slightly different things.
A lot of them do that.
Yeah. Okay, so they have 321 employees. They're incorporated in Delaware, but their offices are in California. Emeryville, California is in the San Francisco Bay Area, I think. They have a pretty good website. So yeah, they lease their headquarters in San Francisco Bay, across the Bay Bridge. Cash to debt is not too bad. I couldn't do a quick ratio because I couldn't figure out what their all the numbers for that in there from their financial statements.
Quick
But the
ratios
debt-
usually don't work well on financial type companies.
Yeah. Debt to equity is 16%, which isn't bad. And it's down from their 5-year average. Although their 5-year average has bounced around quite a bit. So it's a growth company. It only has 348 or $370 million in sales, depending upon which set of numbers you use. Morningstar calls it aggressive growth, actually, and it's small size. I've got the small cap wrong. I can't. This is the same as the sales, so that's not right. Morningstar didn't give an estimate for sales or EPS growth. They did say it has a narrow moat. Its fair value is $32, and they say consider it a buy at 23. Its present price is $19.10. Value Line says that it's going to grow at 16.5% in sales and 21.5% in earnings growth. Timeless is not the highest, but it's better than the average. Safety and technical are about average. The annual return, that is their prediction for what the annual return is going to be, is between 10 and 22%. All right, so CFRA says that they have $378 million in growth. I'm sorry, in sales, and 247 in earnings for 2019. Those numbers just came out this past Thursday, I think. So for the SSG, we have to say what we think the growth in sales and earnings is going to be. I said that the growth was going to be 16.5%. That's what Value Line said. But I knocked back the earnings to 15% for reasons you'll see in a second. The pre-tax profit margin, one of the measures of quality in the stock selection guide, is up to 58% from a 4-year average of 36 and a little bit percent. The earnings on equity, return on equity, is 24%, 24.8%, up from a 4-year average of 16. The average PE is just under 10. The current PE is 7.8. The projected PE is 6.8. And the price earnings over growth ratio is 0.5. So we usually like it to be under 1.5. So 0.5 is really good, if you can believe it.
Time
so the beta.
Can I have a question?
Yep.
I understand that they sell PMI insurance for people that may default or need required for their loan on their house.
Yeah.
What are you thinking with this virus if a national emergency?
Yeah, we're going to talk about that in a second.
Okay, thank you.
It's there's two things going on: the virus and the interest rates. And yeah, so I'll get to that just right now. So it is a little bit of a volatile stock, more than average anyway. Yahoo always has higher numbers, I've found, than Value Line, but they're both over 1. Okay, because of the market sell-off, long-term bonds have reached record lows. The 10-year rate was on 10-year treasuries was 0.54%. That is the interest rate that you get if you buy a treasury bond is 0.54%. Let's see if I have this here. So this chart here shows the interest rates on 30-year bonds. Yeah, fixed interest rates. I'm sorry, this is mortgage rates. This is what consumers pay. So the trend has been for a while in the very low territory compared to historically. It dipped. Look at the 4% rate. It dipped below 4 once in 2012 and 13, and again in 2016, 17. It is now below that again for some of last year and this year. It's now at 3.5% for a 30-year mortgage. This is a chart from an investor conference that the NMIH had last fall, and it shows the total, not theirs, but the total sales of mortgages in the country rising from 2015 to 2019 from 900 billion to about 1.3 billion. But it also shows that the percentage of those mortgages that have PMI, private mortgage insurance, has also been going up from 19% to 24%, although the numbers were provisional when this came out. So this is the good news, that mortgage rates are down, and buying is up. But there's some bad news too. This chart shows you the 30-year fixed rate in a shorter time period. This is how it's been bouncing around lately, from 2012 to the present. But this red line shows you the number of refinancing, the amount of refinancing going on. So last year, and actually for a while, from 2018 to 2019, it's been 1,000. I don't know what this is, just an index. This past week, it was over 6,000, a 500% increase in refinancing from this time last year. So you'd say, gee, that's great. More mortgages means more money, right? Except, so the mortgages refinancing usually has a lower rate of PMI requirements than regular mortgages, because people have been in their mortgage for a while and have paid off some of it. So more mortgages have crossed the 20 to 25% line that require mortgage insurance. So it's not that there aren't any in refinancing, it's just that the rate is less. So mortgage applications are up and refi is up a lot. Refinancing means, in general, less business for NMIH. But the overall coronavirus impact, if it actually throws lots of people out of work, if we actually go into recession, then people, when they're out of work, don't generally buy houses. It may also increase the number of defaults, which are pretty low at the moment, and increase the claims for the PMI insurance. So there's good things and bad things about the low interest rates, and there's mostly bad things about coronavirus. Okay, so the reward part, the first mortgages are up too, not 500%, but they're up. The proportion of mortgages recurring insurance has been increasing in general, so that's good news. Higher home prices and essentially younger people getting into the housing market without the necessary 20% or more down. The other good news is that unemployment is low, at least for now. Rates are low. And both of those things encourage home ownership in general. So,
what is this company doing with their float?
they've invested it in bonds. And they seem to be high quality bonds, treasuries mostly, but there may be some corporate bonds.
What has been their past performance for the last 2 years on their float? Good.
They've been doing well, I think. Let's see if I can find that information.
You know, I would try to compare that to Geico, who, of course, is owned by Berkshire Hathaway.
Yeah.
And that is a cash cow for him because they use all the float to. And I realize that, you know, we can't anticipate what's going to happen here. And I think it's really good that you're analyzing this. It's very important.
Yeah. Okay. So the SSG, which I'll show you in a second, or maybe I should show it to you now. So this is the stock study guide that we use to kind of summarize what we think about things.
That's for Ulta though.
Beauty.
Oh, sorry, wrong. I thought the numbers weren't quite right. This looks better. So this small company, $370 million per year is what this. I guess this comes from FactSet or somebody, Morningstar. So it's $370 million in sales. Different companies peg the number slightly differently. And last year they earned $2.47 per share on that, on those sales, on those premiums, basically. The projections that Value Line suggested were 16.5% growth in sales and 26% or something growth in earnings. I left the sales alone and cut the earnings back, at least partly to represent the uncertainty in what's going on. You noticed in this is the 2020 price range of the stock, and this red dash is where it is now. So it's just off the lows, which I guess happened Thursday. So it's down pretty far. We'll see that in a second. So this is the backside of the SSG. The quality analysis basically looks at pre-tax profits going up as a good thing, and they've been going up pretty well, miraculously high. So part of this is because it's a pretty young company and they've kind of got their feet under them the last few years. This is the return on equity, and it looks similar. That's been going up like crazy. Their debt has been going down, although you can see it's bounced around a little bit. the price earnings ratio is not bad. It's averaged 9, almost a little under 10. And the highs average 13. The yearly low price earnings average 6.4. So what we do is take the earnings that we projected from the front, multiply them by the high average PE, and say that must be what the price is going to be in 5 years. Then we do the same thing with the low and the expected low earnings, which I think were this year's earnings, and get a low. But for a low, I picked the average 5-year low price at 10. So we have a high of 15, a low of 10. I'm sorry, a high of 66 and a low of 10. Present price of 19. And that gives us these ranges that Better Investing says we should think about using. So below basically a quarter of the difference between the low price and the expected high price, we get a buy range up to $24. It's presently well below that by about $5. Okay, so this is in the buy range. It does not have a dividend, so we can't count on a yield. But if we take that increase in price from if we were to buy it at $19, the price appreciation in 5 years is 28% if we were to sell it at $66. And this second projection is if we count on the average return rather than the picking the exact high price, we get $20. 20% average annual rate of return. So those are both much higher than we shoot for. We shoot for a 15% annual rate of return. So again, the problem with this all is the uncertainty that we are in because of the two things. What's the overall impact of the lower interest rates and the demand for refinancing on the number of mortgage loans that require mortgage insurance? And the second part is, will people still be buying houses and needing mortgage insurance at all in the next 3 months to a year? So that's my presentation. Any questions or comments?
I thought you were going to compare to Essent.
Oh, I was going to compare to Essent, yes. So let me do the, so Essent is here too. I'll just bring up Essent. So Essent is similarly positioned. It's growing well. The rate of growth is a little lower. It's a bigger company. It's almost, it's still small, but it's almost $1 billion in sales. It's also a buy, that is, its present price of 37 is below the buy zone of 49. Its rate of growth is a little slower, but it's still over our guide of 15%. One of the advantages of of NMIH instead of Essent is that with NMIH, we get a real live value line. That is, this is a full-blown value line, not a pretend one, where they give you lots of information that they don't give you on the sort of short form value line. So I'll bring up Essence value line. You can see the difference. So this is what you get for Essence value line. There's no commentary on what the heck is going on with the stock at the moment. There's a profile, basically saying what their business is. And then they have down here, I'll highlight it, in little bitty print in a sub note that its earnings growth is going to be 10% a year, according to the analyst consensus. So basically, the value line doesn't give you any additional information besides what you'd get from, I don't know, Yahoo or something. But here, but with a real live value line, a full-blown value line report, you get all this interesting stuff about what the business is doing. And one of the things that they talk about is this little part. It appears lower interest rates have spurred increased refinancing activity and greater turnover in NMI's core insurance portfolio. Leadership, that is the leadership of NMI, noted further attrition is expected, although with slightly elevated policy costs and pressure on margins. So this is the first hint that I got, that there was some problem with, or potential problem with, reinsurance and redoing the all the mortgages that are being redone right now. Okay, so let's do the
Challenge.
Thank you. So you can do it from the main viewer. You can do it from here. So you can challenge the stock. I've selected Essent, and we'll look at a challenge. You have to put in what the what we bought it at, which I have here somewhere. $48.146. Proceeds are taxed at 20%. I don't know what we're going to be taxed at, but that's a guess. Flat fee is now 0, more or less. So now we picked the stock we want to challenge it with. This is the list of all of my SSGs that are in my portfolio here. And here somewhere is an NMIH. There it is. All right, so NMIH is, all right, so let's work through this. On this column here, this Essent column, we have the current price, the proceeds if we were to sell it, brokerage costs. They subtract the capital gain tax for us, and then say, okay, if you do all that, then you're going to end up with 634 shares of NMIH, and you will have invested $12,000. And this shows shows how that money is going to grow in the future compared to what Essent is doing if you don't do anything. And it's slightly higher, $35,000 for NMIH compared to $30,000 for Essent. In terms of the comparison, the problem, the more global problems of the virus and the low interest rates are going to affect both of these companies the same. So it's a matter of who's got the better balance sheet, who's got the better response to whatever it is that happens. I want to put this up. Okay, now I'm done.
Okay, thank you, Jack. Pretty good presentation, very extensive. I'm new to home buying and mortgage insurance and everything. I just bought my first house last year.
Congratulations.
Thank you. Luckily didn't have to require mortgage insurance, but so just so I get it straight, the mortgage insurance is to kind of fill the gap for when the buyer doesn't have sufficient down payment to cover the risk or whatever, right? Okay.
That is correct.
And if they default or if the bank forecloses, then they go to like a national mortgage insurance company and say, look, pony up the difference between what the down payment was and I guess what was actually paid for down payment and then what the required down payment was, right?
Something like that. It's more complicated, but that's the idea.
I'm sure. Yeah. Okay. Gotcha. So yeah, I don't claim to be an expert in any of these to know even if, will like something like the virus be a harsh enough recession that people are going to be out of work so long that they're losing their jobs, that they're, defaulting on their homes. And then in the other realm are people hunkering down, saving their money and not wanting to buy new homes. That I guess that seems to be a risk, but it also seems that people are, it could just be a big overblown problem and it might just work itself out as kind of a more severe flu situation. It looked like a pretty strong company.
Did you gentlemen analyze who's running the company, is on their board of directors?
I didn't look at the board.
That bottle was full all over my desk.
This is their
I don't know if I can even use the keyboard.
chairman and executive officer. Those names don't mean anything to me.
I'd be interesting to know of their employees and board what their insider trading is at the Securities and Exchange Commission.
Yeah. They usually give percent owned somewhere, insider ownership, but I don't see it at the moment.
I mean,
I did check, it's not very high, it's under 5%.
I read a book on that. Dividends can be looked at two different ways, and so can stock options or stuff like that. You can go by the Warren Buffett method, and he doesn't get any stock options. He doesn't give any stock options. He doesn't give any dividends. Of course, none of his shares are less than $3,000 a piece, or in the A and B shares. So I'm assuming, I might be wrong on this, that I'm just looking at some of the figures that you have on your sheet, that you have on this little group. You gentlemen have put in about $100,000 to $200,000 but you're using this for a learning experience because you probably, each one of you have a lot more money that you're trading at home. Is that correct?
Yeah, we all have investments on our own. Yeah.
Because the way I look at this is really interesting to learn. And I mean, you know much more than I do, except I've got 4 accounts and we're talking ones with lots of zeros behind them without giving in any facts and figures. And, you know, like I said, you know a lot more than I do. And I haven't, you know, I've got a 401k and I've got an IRA.
Yeah.
I've got a stock account. It's not mine that I'm managing. And as of last Saturday, the account that I was managing, I realized this is 1 week old. But last week in that account, I lost a whopping $20 because of diversification. Of course, I haven't done the figures for today or any of the days in between.
Yeah.
But I can tell you that in my own personal account, I'm down a few bucks. More than you
we're
have in
down.
your account here we're talking about. But I'm doing a long-term investment. And
Yeah.
I'm into some stocks here that I bought low and haven't sold them. So I'm glad I did.
For the sake of time, we're almost at the 1 hour mark. Let's keep moving, and at the end we can do some further discussion. I appreciate the feedback and everything, but we have our current holdings to get through and any buy sell decisions. I didn't really have any other comments on this company other than it looked like a kind of a strong history. And it's certainly I think at a discounted price as many of our other holdings are. So that's promising. But I don't have any expertise to shed, unfortunately, on
How many
mortgage
thousand
insurance.
shares would you buy of this?
Well, let's get to, we'll hold that to after we've reviewed our current holdings.
Yeah.
We don't make any
haven't bought
buy or
this yet.
sell decisions, until we've looked at our current portfolio and then take this proposed stock into account as well. Ira, Steve, do you have any comments on this company?
You know, I looked at Essence again and NMIH. Of course, with the current market, they're both in the buy range.
Yep.
The question to me is, I mean, do you really? I wouldn't want to hold both of them.
No.
And I agree with the risk that people are redoing their mortgages and they won't need as much insurance as before. So the question is, do you want to take a loss in Essence for the portfolio and replace it with NMIH because you think it might do better as the comparison showed? I don't know. At this point, I'm not rushing in to take any losses, so I'd rather buy. We have Five Below on the watch list.
Yep.
And I would rather, if we were actually buying something new, my tendency would be to buy a company like that, which is really way down. That's about all I have on it, really. It's a buy, I agree, but
Yep.
You want to replace Essence?
The numbers look better when I was sure of the growth rate of 20% or something, but I'm not so sure about it anymore.
Okay, Steve.
Okay, yeah, so I have a few comments on this stock. So when we look in past history on the quarters, Essence and NMIH, NMI Holdings, are about the same age, roughly. The problem with NMIH is for about the first 18 months of life, they lost money.
Yep.
This does not make me feel happy when I'm flying to fortress balance sheets right now. They also had a massive toe stub in 2018. And for those who are new on the call, my euphemism for toe stubs are, gee whiz, it didn't kill me, but man, it hurts like hell. So they did this first quarter of 18 and they actually lost money. So 3 cents a share negative. So it doesn't make me happy that they had a negative quarter 2 years ago. It's badness in my opinion, especially when all I was looking at Thursday were fortress balance sheet companies.
Yeah.
So that just
So this
I didn't like that. So and then my point of bringing that up is this: Essent has not. Now they've had down quarters, but they didn't lose money. So this thing was shedding money. Now, and to me, if they did that, they might, in other words, Essent's not going to do it where this one has done it already. So if, okay, we'll have to report a losing quarter, and they do it. They don't do the accounting gymnastics. So that bugs me. I don't like that part of it at all. Also, Essent, when I did the analysis in Fidelity of the comparable companies, Essent, and this isn't a big deal, but Essent has a much higher analyst rating than I think it's like a 7.9 versus a 4.5. The one thing that, they're both dirty, right? So they're both selling PMI insurance. So they're both ESG laggards. So they're the same with that. And I've been flying to ESG stalwarts because people are migrating to ESG. So they just are. And both of them are they will give you private mortgage insurance if you only put 3% down. Now they're making a fortune on that. So, and I checked it. You can both mortgage 97% of the house with I looked at their scales, at their rates, and they both will do a 3% down loan, and they just make globs of. So I mean, they're printing money with this. Essent, and this is one I didn't catch until you did the comparison, Jack, which is Essent's pre-tax profit is higher, and it's sustained higher, and it's way higher. So that I really liked it for Essent. And then the other thing I think of is this. It almost seems that NMIH is newer and smaller, where Essent is bigger and more established. Yeah. And so your rate of growth might be slightly higher, but we're into an unknown here. And I would defer to the stronger, more established company and take, the 30,000 versus the 35. Now, in all, this could blow by and it could be nothing, or we could hit the maximum death rate listed in New York Times on Thursday of 1.7 million. And if that happens, everything's going to shut off. No one's going to buy a house. Everything's going to be in the dumper. Yeah. So I defer, because this is more of a new and we have a bad climate, I defer to Essent. So that's kind of that's my take on it. Thank you.
Okay. Great. Thank you for that. Why don't we move on to reviewing our current holdings? Ira, can I give presentation to you to show the portfolio?
Okay.
Let's see. So for me, Fleet Core, not a whole lot of news that I could find. The only thing is that it's now, I believe, back in the buy zone. It's down to, it was around $306 at our last meeting. It's down to $235, which is within $1 or so of Jack's buy range. back from 2018. So we could possibly consider increasing our holdings on that if we wanted to. Athene fourth quarter earnings per share was $2.42 compared to same time last year, which was actually a loss of 53 cents per share. Full year earnings per share $11.41 versus $5.32 for the prior year. They attributed the positive results to a favorable change in fair market value of reinsurance assets due to lower U.S. Treasury rates. Also, book value per common share increased 80% from last year. This is probably thanks in some part to the stock buyback program, which I think they said they repurchased about $920 million of common stock. So that decreased the numbers a bit. It's down, I believe, in the buy range also. It's $27 compared to $46 from last month. Tractor Supply, this was kind of lean on news as well. They did mention that the Toro brand lawnmowers will be sold at Tractor Supply now, making it the quote unquote zero turn headquarters, which I guess refers to the model or type of lawnmower that you don't have any sort of turning radius. For those people with larger lawns, I guess that could be an advantage for my little postal stamp sized 3 blades of grass. I don't have a big need for that, but to each his own. There was also some news that Tractor Supply is participating in some Tennessee-based relief efforts for tornadoes that have blown through there in the past week or so. This one I wasn't quite sure on what the buy range is, but it's down about $20 again from last year's price. We're at $76.21, so it's a buying opportunity as well for that. And that's it for me. Steve?
Yeah, so if we go to Middle B, which is my new one, what I did was on all three, I looked at the cash position because I was traumatized by the last week. So this thing Middle B has $94.5 million total cash. They acquired Deutsche Beverage Tech, which dovetails perfectly into the SS Brewing acquisition. So what that is it's beer brewing equipment. It's like the high-end stuff. If you want to open up like say a little store that brews, this is where you go to buy the equipment from. So it's Deutsche Beverage annual sales was 40 million, and I fully expect that to be completely accretive in this year. There was a rumor that McDonald's was going to compete with the Popeye chicken sandwich, and they needed like a special oven, but that hasn't seemed to materialize. So on 2/26/20, there was an earnings beat. So that was very good news. So that means America's buying, which is good. And they did a really smart thing, Middle B, in the end of January, beginning of February. They did a 5-year deal on $3.5 billion they did a new credit agreement. So thank goodness they did it. So that's really good. So I felt at least it seemed half decent. If we're going to go into recession, though, those high-end Vikings stoves are going to be a hard sell. Google, 2 words, cash fortress.
Can I ask a question?
No, I'm sorry, I'm talking. So until we're over, then you can ask all the questions you want. Google, so where was it? Cash fortress. So $119 billion in total cash, and can well pay that. They can eliminate their debt with that with no sweat. I tried to buy some this week, but I couldn't. I was trying to do the esoteric calls, and they weren't firing. So just a wonderful company. And they're also making a website to do the coronavirus, where You go through the drive-through testing thing, and so we're gonna start ramping up. So tech is gonna join the fight. They're gonna be in the lead, and so I think that this is gonna be the stock's gonna go up. Visa, Cash Fortress, I don't know. No slouch though. 12.67 billion in total cash, but they have more debt than that. So still wicked strong, no problems. So they have a couple of headwinds. One is it looks like, of course, Visa is the major sponsor of the Olympics. It looks like the Olympics might get delayed. So everybody uses a Visa card when you're traveling globally, right? It's the only card that works. You go to South America, MasterCard, oh, we don't take it. Oh, what do we have? Visa, oh, okay. So that's going to be affected. People aren't moving. So I think they're going to see a little drop because travel is dry. Certainly there's no cruising, and flights have been drastically canceled. So I'm a little bit worried, but I think, hey, people have to eat. They're going to use their card. And it's in very good shape financially. Not as good as Google, but no slouch. And then that's kind of my report for today. Thank you.
Okay, I sent out a new report for Regeneron, I believe. Regeneron is doing very well because of the virus, unfortunately. They're working with the government on the vaccine. The stock has been going up. It's definitely out of the buy range right now. It's currently 465. I have to buy it to 369. Gentex is in the buy range. Currently at 25, I have a buy up to 27. And Lithia, same type of thing. It's currently at 95. I have a buy up to 124. So with the current market, these, Lithia and Gentex have dropped like everything else, and except for Regeneron. They're potential candidates. Nothing new on their earnings or anything. That's all I have.
Okay. All my companies, Dollar General, Essent, and Ulta, reported at some time since the last meeting. Dollar General price is down a little bit, 6% lower than last month. And they were actually up for a little while this week, but the net result of all that up and down, or down and up, was it's 6% down. They reported earnings on Thursday, and their sales were up 7.6%, and the earnings per share up 14.1%. And for the fiscal year, the numbers were similar. The 2019 sales were up 8.3% over 2018, and the earnings per share was up 11%. It's in other news, it's expanded to 45 states. We got Wyoming. It plans on hiring 8,000 new career opportunities in fiscal year 2020. So that's good, I guess. They're still expanding is all I'm saying. So Essent got a new value line. I did a new SSG on it, and you saw the results. It's still a buy. Dollar General, by the way, is a hold. They reported earnings per share up 13%, $1 to $1.49 over last year. Sales are up 18%. Okay. Ulta is, oh, and Essent is down 28% over last month. 28% below last month. Ulta is down 30% from last month. It reported earnings that beat the estimate, 389, up 8.4% for the quarter, and on sales of 2.3 billion, up also 8.5%. No news otherwise for Ulta or Essent. And Ulta's in the buy zone. That's it for me.
Okay. Thanks, everyone. Anything from the watch list?
Yeah, the watch list. Sorry. Yeah. I'm sorry, just a second.
Yeah, no problem.
Five Below is in the buy zone. It's $76 at the moment. And it's down maybe, so that's down $76 down from about 120 or something in the last 2 months. So it's dropped off a cliff. It's basically the price it was in 2018, 2017.
Do we know what size company it is, if it fits into the mid cap?
It is, just a second. It's 1.5 billion in sales annually. So mid is
So it does.
mid-size. Yeah. Let's see, it's profit. I don't have cash on easily available here, but it has no debt, so that's a good thing. Five Below has no debt.
Looking at quarterly trend analysis, though, it looks like last quarter they took a 25% hit on earnings per share.
Yeah. They still made money though.
Mm-hmm.
Yeah, the third quarter always looks bad for them for some reason.
Okay.
That's about it.
Do we? Is there any moves to buy or sell? I guess motions, I should say.
I don't know if this makes sense, Brent, but I would buy the position that went down the most in our portfolio. That's what I would put the money into, and then we don't have to buy something else.
Mm-hmm.
So whatever went down the most, buy low.
Mm-hmm.
I was going to
They're
say
all
something.
solid companies. I'm sorry, Ira, go ahead.
I was going to say something similar, that let's pick the strongest one of our the ones that went down and add to it. Not necessarily the one that went down the most, but the strongest. Or, yeah, we already have 3 each, so it's hard to buy something new and have us follow it.
Yeah,
I still think 5 below is now in the value range if we wanted to buy something new.
I was going to just throw out that it looks to me that Tractor Supply is in the buy range, and it's our second to least largest holding. I don't think it's by any means has dropped the most in the portfolio, but it has dropped a bit from at least a month ago. I'd say probably, what, 25% loss, as many of our other ones. So as a completely boring proposal, I was just going to say top off on Tractor Supply.
I think that's good. I think Alta's
That
lost
works
a
for
lot.
me.
Yeah, I think that's good. I think Alta's going to be hurt badly because of the face-to-face part of their business.
Yeah, that's true.
As a retired Delta employee, I could give you some information.
All right. Well, just
Delta's falling off a cliff. Yeah.
Yeah. One second. So, Ira, do you have a vote on Tractor Supply?
You think that's one of the stronger ones there? I guess
Well, I don't know. I guess if we didn't think it was strong, let's discuss selling it. But
it does have the advantage of being one of the lower percent of the current holdings, right? So
Right.
I like, yeah, so I could go along with that.
okay.
So Ira, though, what's your opinion on what is the which one would you pick, or which two would you look at that are the strongest that you feel from the group?
I was afraid you'd ask that. Definitely not Essent.
No.
Oh, right. Agreed.
I think Dollar General has a lot of potential.
Okay.
It's
I have it in the hold zone still.
similar with Tractor Supply in many ways, I guess.
Let me
Dollar
do
General's
a quick
selling a lot of
SSG on Dollar General.
They're selling a lot of toilet paper right now, I'm sure.
Yeah.
Yeah, I could go
Yeah, I
along with
agree with Jack. I've got it in the hold zone, so I've got Dollar General in the hold range still because
Yeah,
it went up so much. So
Okay.
Yeah, I've got Tractor Supply in the buy zone.
Okay, that's good.
Okay. So then I'm hearing we're unanimous. We'll buy Tractor Supply.
Yes.
Okay. And it doesn't sound like we have.
You buy it, Jack?
Yeah, I'll buy it.
Okay.
And no other buy or sell recommendations, right? Okay, hearing none.
that's just using the cash from this month's accumulation, right? So
Yeah.
Right.
Yeah. Okay. Yeah.
So we'll look to buy. We'll probably get what 9 shares or 8 shares, something like that.
Maybe 10.
Yeah.
$885 is what it is. No, I'm sorry. It's
$76.
$76. So we'll get a little over 10.
Yeah. Okay. Great. Okay. I didn't have any old or new business. Anyone or Joe, anything from headquarters that we need to discuss?
Other than that, they're talking about the idea of possibly canceling the national convention in May as a possibility at this point in time, not a probability yet.
Mm-hmm.
Yeah.
Okay. One thing I wanted to bring up, that if any of us are hit for whatever reason by, I don't know, downturns or unemployment or whatever, and we need to discuss, an individual lowering of the monthly contribution, please bring that up and we can discuss it. Hopefully none of us are that affected, but I just wanted to remind folks of that. And then next month, I have Ira for the stock study and Steve for the education segment.
Okay. So what I'll do is I'll send the email, and then I'll show you what I'll pitch, and then just to make sure before next month.
Sure. Yeah, no problem.
Yeah.
I think one of the attendees had some comments they wanted to make.
Yeah, now's
I
the
just had-
open forum.
Yeah, I had a question. You were talking about, I'm trying to remember what it was. You were talking about a company that was selling some equipment to McDonald's. Was that correct?
Yeah, Middleby. That's correct. Yes. Or it was a rumor. Yeah.
Okay. Yeah, I understand. Yeah. I was just wondering, in a cross area, if you looked at McDonald's stock.
No, I haven't. But the reason why I dropped the rumor was, why I spoke about it was because if they got that contract, that stock's going north. It's going to go up. So
Oh, sure.
there was a big. I don't know how much you followed this, but I happened to, just by the virtue of what I listened to during the day,
Yes.
people were talking about that Popeye chicken sandwich, and a lot when it came out. There was just because the news people that I listened to, they were all talking about it. So I was sensitized to the fact of that sandwich was doing gangbusters business. And so McDonald's obviously got wind of it, and they've done an experiment where they need a special oven that Middleby supplies. So it hasn't materialized, but it would be sure some nice icing on the cake if that.
What's interesting, I read the story.
Say that again, please, Dwight.
I read the same story. So I think that's a good pickup. I don't know where it could go either way. And that would be flipping of a quarter, I would think. It could or it could not. I don't know.
It's a rumor. It's not a signed contract.
Correct.
So that's all.
Ira, can I
One
have
more
the screen?
question.
Ira,
I got one more.
Sure.
Can I have the screen a minute?
Yes.
Well, here we go. This is a stock selection guide on McDonald's. Actually, it has not been prepared. I just pulled it up so we can see rough numbers of this company. The green line near the top is sales, and we can see that sales have been, over the last 10 years, in a declining mode. Earnings per share have been growing for the last 5 years at a fairly good rate, it would appear. Historic, it's saying sales are shrinking about 2.6% over the last 5 years, but earnings per share have been growing about 5% over the last 5 years also. And we see that the vertical bars are the price range, and we see that the price range has it's fallen into the lower end of its price range at the present time. It sells over on the next page for a price earnings ratio that ranges on average over the last 5 years between 20 and 26, and it's currently at 22. So it hasn't pulled back very far despite the current price. Now, I haven't done the rest of the work to determine what we would think it would do in the future, but that just gives us a little bit of an idea of what McDonald's looks like. That's all I needed. You can have it back, Ira.
Well, Middleby and McDonald's are totally different companies.
Oh, yes, absolutely.
I wouldn't compare them at all anyway. So.
No, but he asked the question, so I thought it wouldn't hurt. Dwight asked the question, so I thought it wouldn't hurt to take a quick look at the company itself.
Yeah, thank you, Joe. I own McDonald's, by the way.
Dividend play.
Yes.
I have a question.
Yes, Elizabeth, I see your hand up. Go ahead and ask your question.
Is Google in the hold range? Is that why you didn't? I mean, Alphabet. Is that why you didn't consider increasing your position on that?
I'll take that, Brent. So Google is a relatively expensive stock. So let's see, I'm looking at it now, and it's roughly $1,200 a share. So I suppose that, especially in these times, people are flying to the fortress balance sheet, and certainly Google is of all the stocks that we have, it's the strongest one financially. But where are you going to get the biggest bang for your buck? It's not going to be at $1,200 a share, not with the amount of money that we're putting in.
Mm-hmm.
So we're going to actually get a larger return with a smaller share price.
Right.
And also bear in mind
Okay,
that $800 available to spend, and the price is $1,200. They don't have enough money to buy even one share right now.
Yeah.
We'll also look at the portfolio as a whole. We have 12% of our holdings in that already.
Yes.
And if we want to keep a balanced portfolio, we should not add to it.
Got it.
Yeah.
Thank you. I have another question, if I may.
Sure.
So I'm in Massachusetts, and we don't have an active chapter, and I've been looking for a way to join a stock club or find people in my area who would be interested. And I was wondering if you had any suggestions. I contacted Member Services, and basically they said to look at the website under the Massachusetts, and there's nothing there. So is there a forum, or like, how did you guys meet, and how could I meet people?
Elizabeth, this is Joe Farrell. Right now, these guys are members of the online chapter, and I think Massachusetts falls into the online chapter. I happen to be a vice president of that chapter. Although I live in Mississippi, we cover a fairly large territory. There aren't many available clubs that I'm aware of in Massachusetts, and we are not allowed to make the recommendation specific to a club. What we're trying to do and working toward is building a list called Visit a Club. The idea being that if somebody has an existing club that would like to find new members or have people come and visit them, they put their name on that list, and you can find it on the BI website under online chapter for your particular instance. We're just beginning to build that since the online chapter is fairly new. Unfortunately, I happen to be the person that's supposed to be getting that done, and it's been a very slow process. A lot of clubs aren't interested in having visitors. The club you're visiting today, the Model Club, is looking for members, and they meet online rather than face to face. And you sound like you have some experience with better investing, if given you've talked to chapter services or member services, I guess it was.
I've got a little bit of experience. I'm still a novice.
Well, these guys are looking for folks that are novices that y'all can learn together, I guess would be the right way to say it. Would that be close to right there, Ira or Brent?
Yes, I think the one thing is that if you're looking for an in-person meeting, that's unfortunately not us, because I'm currently in California, and the other three are spread across, I guess, in Connecticut. But we don't meet in person since, what, 10 years ago or so. But certainly if you're up for meeting online, like, virtually once a month, Saturday mornings like this, yeah, we are definitely open to new members.
Oh, yeah,
I
I'd
was
be
gonna say I'm
interested
in
in that.
Minnesota.
Yes, that would interest me, because right now there's nobody in my area to meet with in person anyway.
Mm-hmm.
So this would be a good opportunity for me to, get started and increase my knowledge.
Right. Well, like I mentioned at the beginning, the meeting that you guys, all the attendees just witnessed, is a fairly typical format where we have a little bit of educational segment. We go over minutes. We go over our current holdings. One of our members presents on a rotating basis a stock to study. Then we are each assigned, right now it's 3 of our current holdings, to just check on the current price, any recent financial statements that they've put out, or just general news. And then we discuss what to do with our monthly contributions. Currently, the monthly contribution is $200 per person, but it is flexible based on an individual basis. We have gone down to $50 per person based on individual financial needs and situations.
What's the initial?
And then no initial buy-in unless the candidate wants to. So it could come in and just start paying the monthly. You have a much smaller holding, and you're open to buy in up to what our current, what the current members have.
Fractional ownership then?
I'm sorry?
Would this be considered a fractional ownership?
Well, this is a partnership, and as a partnership, you're buying partnership units.
Right.
Won't you put up the member status report?
Yep.
What I'm saying is, if I put in $10,000, what would that get me?
Well, you can see what. Go ahead. You go ahead, guys. I'll shut up.
Yeah, about 10% of the club, give or take. This is Jack. I'm at 5% almost, and I have $5,000 in.
Mm-hmm.
So that's round terms, it'd be about 10% of the club.
Now, I would assume that all of you are doing this for either fun, education, both, or something else.
All of those, I think.
Yeah.
Okay.
Yeah, one thing that's some model clubs, I guess, are strictly that. It's a model where they use fake money. And from what I understand and have read, is that there's a lot less, I guess, commitment, because you don't have any, horses in the race sort of thing.
Yeah.
We decided from the very beginning when we started this back in 2008 that we would be using real money, even though it is open to the public to observe. So that's why we have the monthly contribution. And because we're down to 4 people, we have increased. I forget what the starting monthly contribution was, but we have in months past increased it to now the $200 per month, just so that we have a little bit of a we can buy more than one share of companies on at each monthly meeting.
Now, as regular investors, each one of you, I see your names here. Is this pretty much how your individual trading is going, or is this the only trading you're doing?
Speaking for myself, this is just one of several other investment paths that we're taking. I use it personally as to keep myself honest, because for me, because of other personal and work commitments, it was too easy in the past for me to carve out time to sit down and go over my holdings and research companies and everything like that. So for me to commit to being in front of you guys virtually on a monthly basis, it means that I need to sit down and at least dedicate a couple hours each month to this. It's also great to hear feedback from the other members as far as their take on the current economy and how they analyze and choose new companies. So I think every meeting, it's a learning experience for me, at least. And certainly, Steve has his trademarked toe stub analysis that he does once a month. So that's always interesting to hear. So for me, it's mostly a learning experience and a exposure to other people's opinions. And the monthly contribution is kind of the ticket in the door sort of thing, but it's not the entire holdings.
Has this club ever made any, I'm going to use the word minor mistakes? What did you learn from your mistakes, if any?
I'm sure we have. I think ultimately it's the whatever you would call the reverse Midas touch. You know, that we buy a security and guarantee the next month it has dropped in price, sort of thing. I don't know that we have. Go ahead.
Our timing is impeccable.
Yes, exactly. I
Well, I
don't
can
know
tell
of
you
any.
that I very often do not wear my, and I have it here on the desk, a solid gold 18 karat Piaget polo watch, but that means absolutely nothing to me.
Mm-hmm. Yeah, I think there's, ultimately, a retrospect is 2020, right? So we could have, I think we would have liked to have gotten in on Five Below and other ones that have just taken off like a rocket early on, but we either didn't look at them early enough or were too conservative in our approaches.
I got one last question, then I'll shut up, I promise.
Okay, go ahead.
You were talking a lot about the coronavirus and stuff like that. Did you look at a company which I hold a few shares of stock called INO is the stock symbol?
I don't believe that's been presented at our meetings. I haven't personally looked at it.
As just then I would not recommend anything to you or ask you to look at anything unless I personally did some research on it or a family member. The first one would be INO, which I own several thousand shares. And the second one would be, by the way, they're going in testing and their stock has gone up and down, but I've done very well and I haven't sold it. I bought it 3 times in the past 90 days. The other one is a family member owns this and has about $100,000. Didn't only vested $7,000 and now it's worth over $100,000, and that would be called Hawkins Chemical. I think it's HWKN, and they're based in Roseville, Minnesota, which is a suburb here, and they're a very large corporation of chemicals, and it's a very well-run company.
Do I just realize that we're not traders?
Oh, I understand that. I
We're
understand that.
long-term investors, and we
So
only
am
meet
I.
once a month.
I agree 100%. I am a long-term investor.
So we're not trying to
Yeah,
jump
so
in.
I need to give you some of my feedback because you're going to get the unvarnished feedback from this group. So I just did a quick SSG on INO, which is INOVIO Pharmaceuticals. So
Yes.
then don't take this the wrong way,
I
but
won't.
this is what we would consider junk. And there's no way on earth where we would ever buy this stock, right? This is a spot buy only because of coronavirus. Yes. That is the only reason that you would ever purchase a stock. So we don't buy like that in this group. We buy growth at a reasonable price. So companies that have earnings track records that are not losing money. We do not buy companies that lose money. So just to be very clear. So any stock like that is junk and is no.
Well, I guess
just so you know how I feel. Okay, there you go.
I agree. I was just wondering whether you looked at that in relationship when you were looking at some of the other coronavirus ones.
Right, that's a spot buy. And have I done medical companies that I don't own? Yes, I have a watch list. Is it on the watch list? Yes, it is. But would I? It's who's going to get to the vaccine first. That's the stock that's going to skyrocket. So that's what you're talking. You're talking about a spot buy, and we don't do that in this club. So just so you know.
I agree. Okay. I agree. I just wondered if that was in your preview of looking at many different things.
Okay. Any other questions from the attendees?
I have one. Whose page am I looking at right now?
You're currently viewing Ira's. He's our secretary. This is our current holdings using Bivio, which is a
Well,
a
Ira,
model
I
club.
think we've got the same webpage because I'm a platelets donor at the American Red Cross.
Good for you.
16-gallon pin.
Wow.
Of course, it's a little bit different than blood donation. It takes a lot longer, about 3 hours, but not as much as my dad before he died. He was a blood donor. He was in the 25-gallon club.
Oh my goodness.
Of course, he worked for Whirlpool for 35 years, and every 56 days, like clockwork, they would show up. And he said, "Follow me. I'm going to take a 2-hour break." He was the boss.
Commendable.
Elizabeth, if you want to contact us offline to talk about membership, we'd be happy to do that.
Yes, how can I contact you?
You want me to take it, or Brent, do you want to take it?
Feel free, Ira. I think you've contacted a lot of other people. That's fine with me.
Okay, I'll give you an email address to start. How's that?
Okay,
It'd be HAASIL0102@gmail.com.
okay, thank you.
Or anyone else who would like to discuss further.
Yep, and I will mention that we meet monthly, second Saturday of every month. So our next scheduled meeting is April 11th, 8 a.m. Pacific time, 11 a.m. Eastern time. So feel free to join us again if you're interested. And with that, I'll say thanks everyone. Stay safe out there, and hope to see you again next month.
Thanks, Brent.
All right, bye.
Bye, Brent.
Bye.